G'day folks, welcome back to another update for the S&P500 and the NASDAQ. Now they've both stabilised since our last update, but we'll see where they're going. We've got a slight bullish move in the smaller time frames. We'll have a look at that. We'll also include some back testing, and don't forget that like and subscribe button to support the channel. Also, just a reminder, we've got a weekly video we're putting out now called Pete's Investing Plus One. The last one we did was on money management. So if you're new to trading and want to get a better understanding, and we sort of break it down into 101 type of basic analysis. So if you're not quite sure of what I'm talking about in these daily videos, then this Plus One video series should help you better understand the analysis we follow. In terms of the outlook, as of today, April 15, the earnings outlook, the S&P 500 is projected to report first quarter earnings growth of 7.3%, marking the 7th consecutive quarter of year-over-year growth. However, due to typical earnings surprises, actual growth could exceed 10%. Valuation concerns: despite recent market pullbacks, US stocks remain highly valued. Citigroup has downgraded US equities to neutral, citing persistent high valuations and potential earnings downgrades. Trade policy impact: uncertainty from recent tariff announcements has led to earnings estimates revisions. Analysts have lowered S&P 500 year-end targets, with some projections ranging between 5,000 and 5,500, reflecting caution and policy unpredictability. Sector performance: healthcare and information technology sectors are leading in earnings growth, while energy and consumer discretionary sectors face declines. Market volatility: the S&P 500 has experienced significant fluctuations influenced by trade tensions and economic indicators. Stability may depend on favourable policy developments and economic signals. So starting with the S&P 500, we always look at the long-term trends first. So I've got the monthly, the weekly and the daily. So on the monthly, first off, you can see here we did have this very long-term bearish divergence, this recent one. We've had a couple actually, if you scroll back. We've had a few of them back here. And the first one retraced and hit that target range. And that would have been a 23-38% range on the, if we draw a Fibonacci to that low there, it's measured by that 23-38% retrace, and it did that successfully and bounced out of there. Now since then we've had another bearish divergence. Let me just get rid of that. And that is also, with that week of the current month, it's hit that range. Now we may see further downside. The CCI is still dropping. And again, that's this 23-38% range of this Fibonacci range between that high and that low before that divergence started. So that's on the monthly. On the weekly, we had another set of bearish divergence here, another couple of them actually. And this one actually broke well below this 23-38% range. And it's still declining. We've got a bit of a slight pullback on the weekly here with the CCI, but it's still bearish. You see there in the current week, it's still bearish, a very slight bearish candle so far. So don't get too cocky with going long. On the daily, we drew this support line, these two support lines initially some time ago. It broke through this minor support at 50.90, and then it's finally bounced off this hard support at 49.26. And since then, it's actually, the CCI has broken through the moving averages, and the price has retraced back to those price moving averages as well. Now, it's a slight bullish move on the daily, so you probably can go long on the intraday time frame. So if we go to the 1 hour chart, here we've got the 1 hour chart. Let me just go to the chart without the back test first. So here, for example, you'd be going long in accordance with the daily, and that's indicated by this period back here. So if you were trading on the hourly, this is the hourly chart, you could take some long trades there. But just be cautious. This doesn't look too strong to me. I'd like to see the daily also break higher on the moving averages to be more confident, like it did back here. That would have been okay. If you had taken the bearish divergence out of the equation, that would have been a better area to go long. But at the moment, just be cautious about going long, and I'd like to see that break below the moving averages to start taking short trades again. Now, if we look at the back tests, I've got the stop loss approach here and the average down approach. Now, they're both, up until this point, they were both yielding the same results. And you would have stopped taking short trades. So what I've got here, the back test started here based on the daily. When the daily broke below the CCI 150, the moving averages, and so did the price. That's where I started these two back tests and the stop loss approach. And I would have stopped them when that CCI broke into that moving average range at that point there, which happens to be at this point here. And they both generated 2,393 for the stop loss and 2,393 also for the average down approach. Now you'll notice, had you let it go, the stop loss approach would be having a bit of a drawdown, and you may very likely be stopped out when it hits 5% or a 0.005% decline. Remember, we're on the intraday here. Then the average down has already averaged down once, but again, I'd suggest you don't let it go to this point. Once the daily hits that moving average range, you close out your positions. That's the ideal way to do it. The NASDAQ's behaving in a very similar chart pattern to the S&P. On the monthly here, we've had a very strong bearish divergence, very long term as well, started in 2022, and that's finally broken down as well on the monthly. And with that week of the current month, it's hit that 23.38% retrace level, and looks like it still may decline further. On the weekly, had another bearish divergence here, and that's also declining, but it's making a bit of a pullback here. But again, similar to the S&P, we've got a bearish candle so far this week after last week's bullish move. And on the daily, a slight break to the upside on the CCI, although notice the price is still trending down with those moving averages, and it's hit that moving average range and still declining. So just be cautious about going long. I'd suggest wait for that to break more convincingly and for these moving averages to turn up to be more confident. On the intraday time frame, we've got here the two trading strategies, the stop loss and the average down. Again, similar to the S&P, you would have taken that short position from the daily when it broke on the 1 hour time frame. You would have taken a position there on a daily when it broke below the moving average of the CCI, but also the price. And that's where these two back tests start and begin trading from. But notice also we had this bullish divergence back here, and that actually broke up and hit that may have just actually missed it, to be honest. So that might have been a failed bullish divergence. But then the price kept dropping. So again, I never trade these divergence. I always use them as a potential area to get out of a trade if it's going against me. But in this case, just let it go. And that would have been in alignment with this daily retreat on the downside. And then we had another bit of a rise here. So had you let these two trading strategies run, you would have closed them out when the daily hit that moving average range, which happens to be this area up here. So the stop loss approach and the average down approach both generated $518 if you had taken short trades up until there. Again, stopping it out when that CCI breaks into that moving average on the daily. That's it for today's update. Again, look out for the Pete's Investing Plus One videos we put out around the weekend time frame, around Friday or even on the weekend, and we dumb down any questions you may have. We've got a guest on the show who asks very simple questions that may help you understand better as well. Thanks for watching. Hit that like and subscribe button, and we'll see you in the next update.